Good morning. Welcome to the Financial Management and Marketing Essentials webinar.
My name is David Rudd, and I'm an accountant and director at Burton and Co. I love Marvel, Star Wars, and helping business owners transform their numbers. Given the data we hold, we believe it's critical to have a really strong set of core values. So we decided we'd plaster these front and center in our office. So our key values are passion, simplicity, approachability, problem solving, and technology. So we use these core values in everything that we do for the clients that we work alongside.
Good morning. My name is Simon Isaac. I'm the founder of Capsule Marketing. I've been working in the marketing business for over 30 years and love working with organizations to evolve and build their propositions. I've done this for startups, scale-ups, and global corporations, and always love to talk about branding and marketing. David's one of our clients, and we're really pleased to be here today with my colleague Laura managing the webinar. If you have questions, do please drop them in the chat at the end, and we will pick them up and answer them as we can. So here's our agenda for today, and we'll kick off with David. We wanted to keep this short, sharp, and to the point, as we do appreciate how busy you all are. But as a reminder, before we get into this, any questions, stick them in the chat box. We'll take a look at those at the end. Okay, over to you, David.
Thank you, Simon. So we're here today to discuss the 3 key numbers you need to run your business. I've worked in the accountancy sector for over 20 years now, and unfortunately have seen a number of businesses fail. The overriding reasons for these failures have always been not having your true key numbers, through 3 key numbers, under control. So first key number that we always look at is turnover. So commonly referred to as sales or work completed. Turnover is the value that your business has sold. So turnover alone is never a good indicator of whether your business is actually any good or not. Have you ever heard of the phrase, turnover is vanity?
Yeah.
Well, alone, it really is. Turnover of a company usually comprises the value of sales it's made or goods it's sold as invoices. You must also consider work in progress or any contracts that you have that kind of span a financial period. This is critical, especially if you work in the construction industry where you run large projects. So second key number is gross profit margin. So this is a percentage of the gross profit you've made as a percentage of sales. So the gross profit is effectively sales less the costs that have been incurred to make that sale. The idea here is the higher this gross profit percentage, the better, because it leaves more money to pay things like overheads, so rent, motor vehicle expenses, admin staff, tax bills, boo, also owners' drawings, dividends. For a company, and this is quite an important point Simon and I were discussing, there's not enough profit left in the company, then shareholders cannot draw any dividends.
Yeah, I'm not sure every director is aware of that.
It's not a good place to
I
be.
am, thankfully.
But we see this sometimes, and the problem with it is it can lead to you having to pay money back into the company, which is never a good thing. Cost of goods sold effectively is calculated by adding up direct wages, materials, subcontractors, anything that's directly linked to making a sale. This is critical to get right because each sector is different and each business will have different costs that go into making a sale. So getting this number wrong can really affect your overall gross profit margin.
Yeah, I can really relate to this. In a previous life, I was an auditor. Yeah, not the most popular of people, but a lot of business owners focus on revenue and income, but in reality, it's about getting the gross profit right and understanding your margin, because that's when you've really got control and you can make a difference and improve your profits.
To make a bigger difference with it as well, massive differences. Final key number is cash held at a bank. So this is really straightforward, to be honest. It's just how much money have you got left in the bank? And as we'll see later, it should be really straightforward. It's really not. So got 3 key numbers, turnover, gross profit margin, and cash held. These are the keys to running a successful, profitable business. However, there are some pitfalls that I've seen. So I wanted to give you these to make sure you can get your numbers right. So first one, turnover. over the years, I've seen numerous issues with this. It should be relatively easy to calculate, but it depends on whether you invoice frequently. We had a client who was not invoicing that often, and the problem with that is then you get these weird peaks and troughs of what looks like odd turnover levels.
Yeah.
Bad thing also is that you can't collect the money if you haven't invoiced it. I've seen another error. I see this quite a lot actually. A miscalculation of work in progress. So work in progress should be the value of work you've completed or started in a period, but you haven't invoiced yet. Should be a relatively easy calculation to make, but if you don't invoice frequently, it becomes an absolute nightmare. It can mean your business effectively leaves money on the table that you can't collect because you haven't invoiced it. So we tend to think that invoicing frequently and getting work in progress move forward to an actual invoice is a culture thing.
Yeah, I agree.
The business, then everyone in the business is invoicing frequently.
Yeah.
It makes things much easier overall, and also you're more likely to collect the money that you're owed.
Yeah.
For the work you've done.
I've never understood businesses sort of invoicing at the end of a month, because you've completed the work, or you're doing phase invoicing for a project. If you've got like a long-term project on the go, wait until the end of the month doesn't make sense, because that's when you're then in, you might have 100 invoices to send out, and that's when mistakes happen, and you don't get invoiced, don't invoice correctly. It just makes sense. The sooner you invoice it, the sooner you're going to get paid as well. And I've always followed that philosophy.
Yeah.
Because and some people are afraid to invoice. They think, oh, we need to wait till the end of the month, or the client's going to kick back.
We get that all the time.
Really?
This kind of worry that, oh, I'm on 30-day terms, for example. We tend to go, well, why? Like, who's made those terms?
Absolutely.
So invoicing regularly, and then potentially even going, can we reduce those payment terms?
Yeah.
Why not?
And we've had clients ask us for 90-day payment terms, but it's a difficult thing to agree to. Culturally, particularly when you're working with overseas clients, that's like the norm.
Yeah.
So for us, that's like we'll even do pre-invoicing for work, and like invoicing in advance.
Yeah.
And we'll do phased invoicing, because we know we're gonna have to wait 90 days to get paid, essentially, even if you're on 30-day terms.
Exactly. Second key number is gross profit margin. So in order to calculate your gross profit margin, we've got to look at the costs that the business has incurred in making that sale. So good example of this is if you're a bricklaying company. So if you bought £20,000 worth of bricks, but you still hold 10,000 of those at the end of the period, end of the year, if we're not putting in an amount for stock, what's going to happen is your numbers are going to be overstated.
Yeah.
This is a real problem, because, and it doesn't sound like it's going to be a problem, increase in your profit, but what comes the month after or the year after is you have a reduction in profit. So you've almost front loaded the profit.
Yeah.
This is a real problem if we have a government that keeps changing corporation tax rates, which we recently have. So stock and regular stock takes give you so much more clarity on what your gross profit margin is. Another issue I've seen, gross profit margin, is effectively the allocation of the costs that you have. So this, in English, effectively, it means what goes into making a sale. And a lot of the time, what I tend to see is that a lot of those costs aren't included, and they should be. They're in the overheads of your company. And the problem with that is, if we're relying on three key numbers, your gross profit margin is not going to be correct, because you've got all your costs underneath.
Yeah.
So if you're comparing your margin against your competitors or historic data, it's going to be all over the place. Final one is bank. So this should be really easy, shouldn't it? What's in the bank? It's not. No, it never is. So the problem with this is, if you just look at your bank account, rely on that as an indicator of whether you're doing well or not, you've got to look at the other stuff that you have on credit. So supplier terms, this can come into it, potentially a team sometimes, but HMRC is the biggest one. Corporation tax for a business is not due as you earn it, it's due potentially 9 months after your year end, so you've got all of this cash that's not yours in your bank account, and we've seen this numerous times, effectively you're borrowing money from HMRC. They don't tend to like that. It's not a great idea. So what we tend to say is have a separate bank account for corporation tax, separate bank account for VAT, and start saving it absolutely on a monthly basis if you can.
This is a really good way to approach banking. And we do it in our business as well. And on a monthly basis, we'll allocate funds to corporation tax accounts, allocate funds to VAT. So what you're not doing at the end of a quarter is looking at your bank, and then all of a sudden it's completely empty.
Scrabbling around for the VAT.
Scrabbling around for VAT. I mean, I've never done that, and it's,
no.
It's really basic, simple, good housekeeping, I think.
It really is. Makes a massive difference. The other issue that I've seen is overdue sales invoices. So these have a huge impact on the bank, because if you're not collecting your money quick enough, and we talked about credit terms, if your credit terms are 90 days and you're paying your suppliers or subcontractors every week, you can imagine what happens to your cash balance. Got all this money going out, nothing coming in, your bank balance just keeps dropping.
Yeah.
So what we tend to do is create a false overdraft for clients that we have. And what that means is you have 3 months of overheads, calculate what that is, and it creates a number. So say it's 100 grand, for example. If your bank drops below that 100 grand threshold, then alarm bells start ringing. You need to go get some cash in, you need to collect some debtors. This is a great approach because it's cheap, because you don't have to pay the bank for the overdraft.
Of course.
But also it gives you time to do something. We tend to use this approach definitely with construction, because that's rife with people that don't want to pay you.
Yeah, I think this is a good one as well. If you don't want sleepless nights, you've got money in the bank. I mean, I follow this sort of 3 month principle about having 3 months of my costs always in the bank. Another good one that David's flagged up here is your debtors as well, and you should be looking at these every week, really. And if you don't have somebody who's on your books, like a bookkeeper, to do the chasing for you, that's, I think, a really good tip.
Yeah, definitely.
Because you're having the conversations about work with a client, you need to have somebody else having those conversations about not paying bills with them.
Exactly.
It's a good strategy. It's not good cop, bad cop, but it's more, and it's business. You have to get your debtors in.
It's really effective as well. Using that approach is really effective. So I've given you your three key numbers. I've given you some pitfalls. So if we put that all together, what do you need to do now? So it's all about the foundation. Just like building a house, your business has to have a solid financial foundation. Otherwise, the whole thing falls apart really quickly, horribly. The key to it really, and we think, is daily. Every single day, we're going to process. You've got to process your invoices. You've got to process your receipts. Obviously, I'd be a complete moron if I didn't practice what I preach. So our business, every single day, we're processing everything. I get hounded if I forget a receipt, which is brilliant. I can log into our Xero, see our turnover, see our gross profit margin, see our cash at bank easily at a glance. Trust me, this helps you to sleep at night. So how on earth do you get time to complete your numbers daily? You've got 1,000,001 things to do. Well, you've got a choice: complete it yourself or outsource it. So whether you decide to do one or the other, there's 3 key elements to this that are vital. Cloud software. So we use Xero in our business, but we also recommend QuickBooks Online or Sage. The key is to have the ability to have this software in the cloud. Let's be honest, the days of your accountant holding your financial data on their desktop, miles away from you, are well gone. Thankfully, that's a thing of the past. The second bit is receipt capture. So this bit of technology effectively captures the receipt of anything you've bought and creates PDF from it. It then pushes that data into the cloud software. And the reason for this is we think if you've got a receipt, someone's already keyed that in. So why are we duplicating the same thing? Let's use a bit of technology to get it into the software quickly. We use Dext in our business, Auto Entry and HubDoc are a couple of the others. But Dext is great because you can create an email account, an accounts app.
Oh, right.
And your suppliers can then email that into you. And what happens with Dext is it then auto recognizes quite a lot of it and then pulls that into your software. So absolute game changer.
So is that something that, for example, my staff could use for their expenses?
Definitely.
Because I find like doing my monthly expenses a chore, filling a form out.
Yeah,
So this does
absolutely.
it completely automates it.
Yeah, that's what I do for mine. So it links all up.
And that will
very
link in with
visually.
Sage.
Yeah, exactly. Yeah,
Oh, it's perfect.
yeah, it's really good. Final piece of the jigsaw is automatic bank feeds. So these now, thankfully, pretty much every bank has this. And the point of it is the bank links to your cloud software. So every day, everything that comes on your bank then is duplicated in your software. The reason for this is speed. We want to process stuff every day. And if we don't know what's going on in the bank, or we have to go rifling through bank statements, it slows it down. So we kind of think, let's use a bit of AI, let's get that information in quick, let's process it.
Fantastic.
So, as Simon said, pop any questions into the chat and we'll have a look at those later. So, over to you, Simon.
Thank you. Let's talk about some marketing numbers because I think that's as important. So at Capsule, our method of blending creativity and performance is what drives us as a business. We're a full service agency, but we work beyond just creating great design and content. We make sure it reaches target audiences directly. And that's like, for us, it's the combination of creativity and performance that really makes a difference. As a business owner, for me, I understand the need to perform, to get your numbers right, as well as being creative as a group of people. So let's have a think about, what I think is one of the hardest things for people because they're working in their business every day is trying to get the head out of the business and think creatively. I think creativity can be learned, but it can take years to develop. Now, some people are born with it naturally and spend their lives thinking about new ideas all the time, like I used to do at school. I wasn't great at maths, but I was always sitting there thinking about the photos I was going to take on my way home from school at the end of the day. So I think my first tip about thinking creatively is to consider your surroundings. Now, if you work at the same desk every day and in the same space every day, you're going to find it really difficult to get your creative head on. So I think using a different space to do your creative thinking is a really good technique to try. So try new places, natural environments, because they can often be quite inspiring.
We do this quite a lot actually with the meetings we have with clients. We tend to have them come to us because it gets them away from their day-to-day.
Good idea.
And it allows them to think about the business rather than think about everything else that's happening around them.
Think about the business, not think about their work.
Yes.
It helps open your mind to new ideas, really. Yes. I think this is what happens. It allows people to be a bit braver as well, and not to be afraid to push boundaries. You can always pull things back. I always tell people this: don't be afraid to think really creatively and think about something which actually that might never work, because you always pull it back. We always endeavour to do this with projects we work on. It's a good trick to get creative juices flowing. But there's a couple of other tools that I want to share with you that actually have roots in business strategy, not just in marketing, but also in people development as well. I've adapted and used these for the purposes of strategic marketing, planning and creating over the years. One of the first things I think is really good is a thing called 6 hats, and it's a useful way of investigating an idea from a variety of perspectives, but in a clear, conflict-free way. It can be used by you, by individuals or groups of people to move outside habitual ways of thinking. It allows you to try different approaches and think constructively about how you move forward. And we've used this lots with clients, but also with our own in-house team as well. Now, what happens is people tend to assume unique yet common roles within an organization under their thinking process. But what this allows them to do is to probe situations and suggest ways to address things, going beyond the obvious or basic ways they would normally adopt. That in turn lets groups and individuals challenge their own capabilities, but actually get more innovative with ideas and combine different perspectives to come up with new trains of thought or process. So how does it work? So 6 hats, as I said, we've run many workshops for clients using this tool to help develop new ideas with their teams, but also gets them thinking creatively. So Edward de Bono developed this. He was a Maltese physician and psychologist, and he wrote a book called Six Hats in 1985, so it's not that old. And as you can see, there's like 6 different coloured hats, and this very simple technique uses the brain's various modes of thinking and aims to empower people to run better meetings and make faster decisions. That was always his philosophy. Now, applying this to creative thinking is a great way to understand your team's individual preferred way of thinking, because you might assume what you think how they'd like to think, but this helps you give a much stronger insight.
Which is really good.
And if you rotate the hats as well, it brings people outside their usual way of thinking. And then what happens is everybody wins and learns. So, for example, if you're the only marketer in your organization or have a team much smaller than 6, then bring in others. You could bring sales teams in, or you can bring in, partners. Great ways to collaborate, I think, and come up with new ideas. You can run the session in 45 minutes, but by rotating the hats as well, if you've got somebody who's like a black hat, and that's not a bad thing, it's a good thing as well, they're always cautious, logical, get them thinking with the yellow hat where they're more optimistic, and logically positive, but then get the yellow hat person to wear a black hat. So I'm usually a yellow hat, and for me it's I'd sometimes drop into the black hat or blue hat, just to really think about things in a different way.
Yeah.
The next one is build relationships with sales teams. If you have a sales team in your organization, then quite often sales and marketing can be seen as adversaries. But really, the closer you work together, the better it is. And I've seen this so many times in my clients' organizations. But when it really works, if you build relationships with your sales team, things flow a lot more easily, because at the end of the day, it's a eureka. What are you both there to do? You're both there to grow your business or grow your organization. You're not. It's not a competition. You should be exactly. You should be thinking about your competition and actually looking at yourselves as partners and getting things done. So building relationships with sales teams is crucial. It can take time, but it's well worthwhile. Now, the next idea is to build what I call a strategy house. Now, these are really interesting concepts. So a strategy house is all about building something from the ground up, effectively. Now, you can use this to construct campaign messaging, and you can use it to structure a strategy for your business. It's structured in a very easy to understand way. Begins with a foundation objective, could be an existing or envisaged objective for your business. But then, you can then assign particular departments to help you develop this foundation objective. Should be an overarching vision, which most organizations generally have. But then what are you looking to achieve? Are you looking to achieve sales growth, brand awareness, or new product launch when you're looking at it in a marketing context? From that, you then build out what I call pillars, which are themes and truths. These can change in title or number as well. You don't need to have 3, you can have 4 or 5. I wouldn't go more than 5 usually. For example, in a recent client workshop, we constructed these from conversations we've had and built out of key messages from pain points of their target audience. Now, one of these was paint a powerful picture of the future. And that contained aspects of what they were looking to launch, what the product was, how it would enhance the lifestyle of their customers as well. So I'd recommend building a number of narratives for each pillar on that basis for, like I say, up to 5 or 6 maximum. And then messaging statements. So these would be crafted statements built out of the themes and truths you create. And these would be used in outward marketing comms with an overarching core campaign message, which forms the roof of the strategy house. Now this, sometimes, I don't know, you see an advert on the TV or on YouTube and you think, oh, that's a really good idea. Where did they come up with that? Generally speaking, there's something underlying it here like this.
Absolutely.
It's a process, it's a strategy. And if anybody wants to ask me more about this, then, pop your email into the chat and I'd be very happy to follow up with you. The next thing is about thinking about your markets. When we're busy in business, we tend to just keep going and, keeping working with the same people. We never think about what the markets are, but, things are changing around you and constantly. So start thinking about customer solutions instead of products, and review your markets and audiences on a quarterly basis, I would say, as a minimum. You've seen the pace at which advertising is changing. There's good reason for that. people and trends are changing. And it's one of the hardest switches to make if you're in business, especially if your work primarily revolves around producing, manufacturing, selling, researching and developing a product or service, then this is a hard thing to do. But what it means is if you do switch out occasionally, it means you focus on your customer-centric, unique selling points.
We've seen this. We've definitely seen this because, well, traditionally accountants just talk about sets of accounts. We don't tend to do that now because no one cares. It's more about what is this going to create? Is it going to help someone buy a house?
It's a really good point because there's so many automations now. I mean, as a business, we're less reliant on our accountant because, you know, we have Sage set up in our business. We have since day one, but it's become so sophisticated and automated now. Our conversations with our client, with our accountant, are more around business growth and opportunities. So it's a really good point, and I think, you know, if you focus more on your unique selling points about your business, it makes your audience's lives easier. It makes businesses more profitable, and it helps gain competitive advantage as well.
It really does.
And you know, and the next few points will help you do this as well. Niching down, this is a really scary subject for a lot of people. Now, market share is important, but volume is too. And you know, there's much value to be gained from niching down to specific market segments. What this doesn't mean is like, you know, you turn away work. It's because who wants to do that? Nobody. But you know, having generic product focused marketing, it usually fails to impress your core target audience. Now, this doesn't mean you just have to have one niche. This is all about niching your messaging in some cases. So focus on, I would say, my advice would be to focus on sectors that know and trust you, because you can specialize to them. We went through a long process to establish our own niches with our clients and who we want to work with as well. But what it's meant is our marketing is definitely a lot more niche focused, from SEO to paid digital to email marketing, social media marketing. We take the same strategy for all our clients that we work with too, and how we recommend they conduct their marketing. People like David and his business.
We've seen the direct impact of this. It's had a massive positive impact on our business, and it definitely was scary at the start.
Yeah.
But it kind of almost gives you a bit more power as a business owner.
That's a good point.
Are we working with the right people?
Yeah.
Can we really help these people? And if we can't, why are we trying to? Because it never ends well. So it's much better to work.
It's a really good strategy. It's scary at first, but it's worth all the effort.
Absolutely.
And then within that, you need to think about your USP. So what's the unique selling point of your business? You've probably heard this so many times, and marketing people talk about it all the time. But it's like focusing on a sweet spot of your brand or your business. It's around the best product built on relationships and service, or is it best price? You know, for me, this is about businesses who've spent years focusing on their product qualities, but I think unpicking what the real unique selling points are for your business, and advice and service that you might deliver to a customer, for example, I think that's really key, and getting these USPs right. And this point, I think, is so important. It's not all about you.
Absolutely.
And, you know, businesses, you know, think about what you do for your customers. You know, what are their needs, their aspirations, and not what you do as a business. And it's one of the biggest challenges. And talking about your own business is natural, but there is another way to approach this in marketing. So think about the pain points or challenges of your customers. We use a modeling tool to assist with this, and it helps us build that marketing messaging. It's also a really good way to look at strategies of working with clients as well. So it starts with the column on the left, as you see, it's like problems and challenges that a business can face. So there's nothing about product in here, as you can see. So this is all about, you know, what are the challenges of your target audience? On the right, you've got two solutions that can help mitigate the problem. It's a really simple technique that you can even keep a live running document of this as well. And we use this constantly within our business to help us build that messaging, particularly around campaigns. You know, so we're, for example, targeting a specific sector at the moment because we know the change of government is going to have an impact on these businesses. And, you know, for us, that's an opportunity.
Yeah, absolutely.
So, you know, this is a really good way then to map out that messaging really quickly. And then the next one is about thinking proposition, not product. So build a proposition around the benefits and the unique selling points you deliver to your customers rather than your product, service, or features. And develop a proposition that, it's a skill process actually. It can take years of experience and application, but I'm pleased I can share my own approach to this today. I've spent my career honing it and developing it for many organizations, large and small. We usually start this with the development of a brand model, but that for us is like a very straightforward and basic thing, but it's a really good grounding to help you build out a proposition. And then being a storyteller is really hard. And this is something I encourage with my team as well. Build brand stories that relate to your customers, that will engage them and help them contextualize what it's like to work with you as well, and what your products and services are like. I think Steve and Burton and Co do this really well. As David talked about earlier, the values that sort of underpin everything they do in the business. I think they articulate that really well as a group of people, and I think it means a lot to clients. Great marketing has always revolved around telling compelling stories that help to differentiate you from your competitors, but they're usually built around a strong proposition. And I remember working with your organization, I think maybe 5 years ago, to develop that proposition, which you've honed and developed and evolved, but it's good to have that grounding.
I think the key with this storytelling, it can feel quite daunting if you've never done it before. But I think the thing around it is people tend to buy into people, and they want to hear stories about what's happened and how you've helped people and what they've done. And that's never a bad thing, I don't think.
I think it's the right thing to do.
I think it is too.
I think you're right, people buy from people, and when I think there's an element of people who like to see a vulnerability or a humility in people as well, because what it demonstrates is that they are true to themselves and they're true to what they're telling you. Exactly. So never be afraid to do that as well. I think it's having that humility, and also sharing things that haven't gone well as well. Yes. I think people, the fact that you share those things with people, it has a huge impact on their viewpoint of you, and that carries through to your messaging and marketing as well. And then the final one I want to talk about is looking at the best markets. So once you've managed to define your niche, focus on the markets that really work for you and segments and audiences, and then review and redefine them regularly so you're benefiting from the best performance long term. At Capsule, we review responses to our marketing regularly, and Laura's who's here with us on the webinar today, that's what she does. We look at all of our campaigns in detail and we refine the messaging, and that's what we do for clients too, because you can send out 5 different ads on LinkedIn, but maybe only 3 of them are getting traction, and then it's about refining and honing the others to deliver.
It really works for us because we were kind of getting leads and stuff, but they weren't the right type of leads. We've worked with you guys and refined that, and the impact has been massive.
It's good to hear.
It's been really good, really positive. So,
in summary, focus on refining your messaging, establishing your messages as well, words, imagery, what channels you're using, and make sure it's delivering results for you as well. And you want to keep going. It's imperative you use the right type of platform to do it. So you can use things like HubSpot, Google Analytics. We do have another webinar which we've run about the best marketing tools to use in 2024, and we'll share that with you in the link at the end as well. So that's us done. So let's see if we have any questions from Laura.
Thanks, Simon and David. That's really interesting. Yes, we've had quite a few questions come in. So the first few, if I'll direct them to David. How do I choose the best accounting software to use out of Xero, QuickBooks, or Sage?
I'd love to say Sage is absolutely the top one to
go
for.
So
the UK company. I'd love to say that, but in our experience of it, Xero and QuickBooks have just put so much into R&D that some of the stuff they do now it makes things so quick. The reports you get are brilliant. So it kind of depends on the size of the business. So we've got a split. We've got quite a few clients on Xero, a few clients on QuickBooks, and then some of the bigger clients we've got are on Sage. So it kind of depends on your size. So yeah, that's what I'd say. It's all about the size, complexity of your business, really.
Great, thank you. Do I need to keep receipts for every expense, even when I buy a client a coffee?
So that depends. So if you use the receipt capture technology I talked about, where you capture a copy of the receipt, it creates a PDF of that receipt in your software. So HMRC will accept that as a receipt, so you can just bin the original. And I do this when I'm out, go and meet people, take a picture of the receipt, get rid of it. It just means we don't have an endless amount of paper sitting around because we've got it digitally instead.
Got it.
Right, thanks. And then how often should I meet my accountant?
I would say at least once a quarter. We tend to meet most of our clients once a quarter, and it works really well because a quarter has kind of a little bit of seasonality in it. It's enough time for things to move forward, and also enough time for them to move forward some of the stuff we talked about last quarter. What we've seen recently is a lot of clients coming to us because they don't speak to their accountant at all.
Wow.
And the problem with that is then it's a transactional thing where the accountant's just doing their accounts after the event and telling them this bad news of a corporation tax bill.
Wow.
It never works. So at least once a quarter, I'd say. As you're growing, if you're quite small, then that might be a bit less because there's kind of cost implications of it as well. But I'd say if you want to grow your business, you've got to be once a quarter.
But if you've got a good accountant, I think you can talk to them about anything.
Absolutely.
I talk to my accountant about the business and ideas and anything really, staffing, profitability. I see them more as like a business consultant and an advisor, not just there to do my end of year accounts.
Yeah.
There's so much more a good accountant can offer.
It's kind of almost like what the accountant should be doing is translating what those numbers mean to your business and then working with you to see if we can change them.
Yeah.
That's kind of the job really. And that's why I love this technology because it allows us to do the stuff we should be doing, not keying in information in a darkened room.
Got it. And it's like focusing on the business, not like the nitty-gritty, which automation can make things so much easier.
Yes.
And then you can focus on the business and growth and the exciting bits, the stuff you should be doing.
Exactly.
Thanks very much, David. Simon, I have some questions for you. What is the best social media channel to post on?
Oh, that's a good question. It could be, I would say any of them. Historically, if you've been using a channel or a number of channels and you've noticed one that you get more traction on, then I would say that would be your channel of choice. People often think Facebook's very consumer focused, but actually, it's one of the cheaper platforms to advertise on. And also, it's also very good from a business perspective as well. So don't underestimate it. And whatever you're doing on Facebook integrates into the whole metaverse. So you've got added benefits of being able to market elsewhere too. So I would say whichever one's worked for you best in the past, and try them all if you haven't used them all before. But then focus on one and do it really well. That's my best advice. Don't try and do everything on every platform. And the other thing is don't post the same content on every platform because then your users will just leave in droves.
Thanks, Simon. That's really helpful. How much should I be spending on marketing per month?
Okay, that's a good one. Obviously, whether you're a startup, a scale-up, or an established business that's growing, it can vary and depends what you've got, I suppose, in terms of budget available to you. But as a rule of thumb, I would say between 10 and 15% of your turnover is a good number to work to. The important thing is where you invest it and how you spend that money. If you don't invest in any marketing, then it's going to be very more difficult for you to grow and get traction in markets.
Absolutely.
And I think a lot of businesses see marketing as a cost, but it's definitely an investment, like a good accountancy firm, I would say, because
it's the same with us. I think the reason people tend to leave accountants is because they're under investing in it, which sounds weird, but effectively, the finance function of the business has a cost to it. But if you invest in it, then there's a reward as well. There's a return on that.
Absolutely.
In terms of our sort of think it tends to be between 1% and 3% of turnover is the cost of the finance function. That includes a bookkeeper as well.
Yeah.
So yeah, we've seen the same as well. Underinvestment every time.
Absolutely.
We have another one sort of on the same lines of investment. Someone here's asked, what is the cost to build a good basic website?
Ah, good question. So we generally build in WordPress because that's what our clients like to use. It's one of the best platforms and most universal. A good website would probably start around £4,500, £5,000 for a basic website. And what that means, what you get with that with us is it's not just one person in their bedroom building a website. It's a number of people involved, a good UX designer, a web developer, a content creator. So if you're investing less than about £4,000 or £5,000, then you need to question is that a really good use of money? Generally speaking as well, our websites last 5 years plus with clients. We can reskin them and redesign things for them. But a lot of platforms, and I would be very wary as well of buying into a platform that means you don't own your website. So you're basically subscribing to a content managed system with a supplier, because if you decide I want to change, then you lose that website and all the content with it.
Thank you, Simon. Just one final question before we wrap things up here. How important is video in marketing?
Good question. That one is, I would say, probably the most important thing that a lot of businesses are missing now is incorporating video into their marketing content. YouTube's like more used as a channel now for search than Google, and people really resonate with video content. And we know that video content outperforms static content in all the advertising that we run for clients now. And we see that quite a spike of growth with clients asking us for video content to market.
Super, thank you. That's all the questions for now. Thanks.
Well, thanks everybody for joining. Really pleased to meet you all. You can get in touch with David or myself. We'll send out the broadcast of the webinar recording to you shortly, and our email addresses will be included in that. Thanks for joining, and we hope to see you soon.
Thanks very much. Bye.